Welcome to this explainer. Right now, we're right in the middle of a massive, unprecedented AI gold rush. But if history teaches us anything, it's that during a gold rush, the big money isn't always made by the prospectors. It's usually the folks selling the vital picks and shovels to make all that digging possible. So today, we're hunting for the ultimate AI picks and shovels company, and we're looking directly at Coherent Corp.
So let's unpack the puzzle. When you think about artificial intelligence infrastructure, your mind probably jumps straight to those incredibly powerful, incredibly expensive GPUs, right? But here's the secret. The biggest bottleneck in AI today isn't actually the chips themselves. It's the physical light used to connect them all together. Section 1, the invisible AI bottleneck.
Picture this. Inside these massive hyperscale data centers, the most advanced AI chips in the world are literally useless if they can't communicate with each other at lightning speed. Now, historically, we've just used copper cables, but at the extreme bandwidths required by dense AI training clusters, copper just hits a physical wall. It becomes incredibly power-hungry and is limited to a reach of maybe 1 to 2 meters, basically just connections inside a single rack. To connect thousands of GPUs across a massive data center campus, you absolutely have to shift to high-bandwidth optical interconnects. You literally have to use light.
Section 2. Enter Coherent and the 6-inch monopoly.
And this brings us to Coherent's role as the ultimate problem solver here, specifically with a critical raw material called indium phosphide. Think of it kind of like a car engine. The industry uses silicon photonics to manage optical data, which acts like a highly efficient engine block. But it can't generate its own spark. It literally cannot generate light itself. Every single advanced optical package out there requires an external indium phosphide laser to actually function. And Coherent, well, they are the undisputed masters of fabricating this essential material.
But Coherent didn't just master the material, they completely revolutionized how it's made. By upgrading their fabrication facilities in Texas and Sweden, they transitioned from legacy 3-inch wafers to massive 6-inch indium phosphide wafers. They were the very first in the world to pull this off at a commercial scale.
Now, you might be wondering, why does wafer size matter so much? Well, it's just basic geometry. Because area scales with the square of the diameter, a 6-inch wafer yields roughly 4 times the usable area of a 3-inch one. That leap in manufacturing scale slashes Coherent's die costs by over 60%. Let that sink in for a second. 60%. That is a massive, highly defensible moat against pretty much any competitor.
Section 3. NVIDIA's $2 billion bet. When you're the gatekeeper to the actual light that powers AI, the biggest players in the world are going to come knocking. To secure their own optical supply chain through the rest of the decade, NVIDIA made a huge move. They injected a whopping $2 billion directly into Coherent through a private placement at $256.80 per share. This is a real game changer. It basically pre-funds Coherent's massive CapEx cycle. NVIDIA gets guaranteed capacity for their advanced roadmaps, and Coherent gets a thoroughly de-risked balance sheet. It's a total win-win. And this NVIDIA partnership transforms Coherent entirely. They're no longer just a simple transactional component vendor. They're a foundational architecture co-designer for next-generation data centers. Thanks to this, their serviceable addressable market has exploded to $23 billion. That includes a massive $15 billion pipeline for co-packaged optics, which is bringing the laser directly onto the chip package, plus $4 billion for optical circuit switching, which basically removes electrical spine switches entirely. And then there's billions more for multi-rail transport and highly efficient thermodite XPU cooling materials. It's the whole shebang.
Section 4, the financial transformation.
Okay, so we've got a structural moat, and we've got NVIDIA's backing. How exactly does that translate to the balance sheet? Well, the numbers really speak for themselves here. We're seeing rapid sequential acceleration across the fiscal year, culminating in a record Q4 total revenue of $2.05 billion. And that acceleration is being driven almost entirely by the data center and communications segment, riding the wave of just insatiable AI demand. This really illustrates the transformation perfectly. 79% of total revenue is now coming straight from the data center and communications segment. The legacy industrial side of their business is flat, but the AI leveraged side is absolutely surging. For all intents and purposes, this is practically a brand new company compared to just a few years ago. But hey, it's not just about top-line revenue, right? It's about profitability. Thanks to those 6-inch wafer cost reductions we talked about earlier, combined with a highly favorable shift toward next-generation 1.6T high-speed transceivers, Coherent's Q4 non-GAAP gross margins didn't just inch up, they expanded to a highly profitable 40.2%. And management has a clear line of sight to push that beyond 42% long-term. Naturally, the stock has had a massive run-up, which leads a lot of folks to wonder, is it too expensive now? But when we actually compare the valuations, a surprisingly different story emerges. Coherent trades at a forward price-to-earnings ratio of 30.8x. Meanwhile, its closest technological peer, Lumentum, trades at 40.1x. So, despite all the hype and the AI optics premium assigned by the market, Coherent astonishingly trades at a structural discount to its peer. Why? Because its earnings base is growing at such a superior rate.
Section 5. Risks on the horizon.
Now, of course, we've got to keep things objective here because the hurdles are real. There are definitely some flashing yellow lights. We're talking heavy cash burn, over $1 billion in trailing 12 months free cash flow, and 0 insider buys against 15 insider sales recently. There's also macroeconomic risk to consider. What if hyperscalers throttle their spending by late 2026 if AI doesn't yield high enough returns? And finally, there are deep engineering risks. Co-packaged optics requires combining lasers directly with logic chips. If even one optical engine fails during manufacturing, an entire crazy expensive GPU assembly could be ruined. So it's definitely not without risk.
Section 6. The final verdict.
Acknowledging those risks is super important, but we also have to weigh them against the fundamental tailwinds. The roadmap ahead is just packed with major catalysts. In the second half of calendar 2026, we're going to see the highly anticipated 1.6T transceiver volume ramp up. By December 2026, Coherent expects to recognize its very first official co-packaged optics revenue, moving that massive $15 billion market from theory into actual financial results. All of this basically paves the way to management's incredibly ambitious target of a $3 billion quarterly revenue run rate by late fiscal 2027.
So, to summarize what you should take away from this explainer today, Coherent's vertical integration and that 6-inch indium phosphide monopoly insulates them from competition while slashing costs by 60%. NVIDIA's $2 billion injection completely de-risks their capacity build-out. We're seeing rapidly accelerating margins hitting 40.2%, driven by the 1.6T upgrade cycle, and they've successfully transitioned into a foundational architect of AI, unlocking a massive $23 billion addressable market. When you put it all together, the evidence overwhelmingly justifies their AI optics premium over the next 6 to 12 months.
Which leaves us with this final thought. The AI revolution requires truly unimaginable compute power, but none of it, literally none of it, functions without the laser light connecting it all together. So as AI redefines the global economy, is Coherent, with its monopolistic grip on that very light, the most vital choke point of the 21st century? Thanks for joining me for this explainer, and I'll leave you to ponder exactly that.